Hi, the straddle. Yes, the most commonly used strategy on option writing by many traders. Everybody does straddle of his own kind, like different kind of timing. You would have heard the 9:20 straddle, 9:30 straddle, 10 o'clock straddle, and then everybody has his own adjustments to handle the straddle depending upon the market volatility. So today we are going to discuss a strategy on straddles which has been profitable for quite some time for me. So I thought of sharing that. Welcome to Algoways. Let's get started. So the disclaimer, as usual, I'm not going to read it out. It's a normal disclaimer. So let's move on. So in a straddle, what are the important things which affects the performance of any straddle? The most important thing is entry time. Now our market opens at 9:15. We can enter straddle anytime after that, and most commonly and most famous used straddle is 9:20 straddle. What does that mean? That entering a straddle at 9:20 with the ATM strikes. So whatever is the spot price of Bank Nifty, we enter the call options and put option sell at 9:20, and then everybody has got their different kind of adjustments. So let us discuss about the pros and cons of different entry times. Okay, so let us go to the Excel. So let us discuss first 9:20 time, 9:20 entry time. So what is the advantage here? What is the plus point of this time is that you will get good premiums, because the market has just opened 5 minutes back. So there is high chances that you will get higher premiums, right? The negative of this is that if market is volatile and in the first 15-20 minutes or half an hour market moves in both directions violently, so what may happen that your one leg gets triggered, the stop loss gets triggered very early. Now if after entering at 9:20 the market remains sideways, you will gain profit here. So if market is sideways, your premium will melt very fast, because you got good premiums and market has been sideways. So there is high chances that you will achieve your target very early, right? At the same time, if the market moves in one direction sharply, but strong move, then also your one leg will go, and you will be in profitable in second leg, so which may give you again the target. So this is the advantage of entering the straddle at 9:20. Negative is, yes, if market is volatile and it moves in both directions in the first half an hour, then there is high chances that your both the legs may get triggered. Right? So how do we decide the timing which is best? Because we never know while entering that whether what the market behavior will be in next 20-30 minutes. Right? So after doing a lot of back testing of different entry timing of like 9:20, 9:30, 10 o'clock, 10:45, 9:45, I noticed that the ideal time to enter is 9:45. So 9:45 entry time is the optimal time. Why I am saying this optimal time? Because whatever market sideways movement or one sided movement, the volatility of the morning would have happened, that would have settled down in first half an hour, right? The disadvantage is in this strategy little bit is that we may not get the best premium rates, okay, but we are ready to give away that, because we want to be safe and we want to take an entry after market settles, okay. You would have seen that in case of 920 entry or early entry, more often than not we will be in losing scenario basically, if you see, right. If you see, if you observe the market daily at around 10:15, 10:30, you will see that barring few days, your premiums would have not melted that much by that time and you would have not got profit. But everybody has a different way of trading. Somebody utilizes the morning volatility, morning high premiums. Other people who want to play safe, they wait for the market to settle and then take entry, say in this case at 9:45. So at 9:45 we enter in the CE, we sell the CE, we sell the PE. Say the premium we got for Bank Nifty is 300, just hypothetically I am taking the example. So you are in a position of one Nifty CE sell at the premium of 300, one Nifty PE sell at the rate of 300. Now what next? We have to place stop loss there are many ways of placing the stop loss. Some people do it on percentage basis, okay. But in this case what I am suggesting or I am proposing is that we place the stop loss of 100 points, fixed 100 points, both legs. So our SL will be 400 for both CE as well as PE. Now let the market work. So how we will do the adjustments? See, suppose market goes up, our CE will be in stress. So CE stop loss may get hit. Suppose CE stop loss is hit at 400, this is gone. When CE is at 400, by that time the PE may be around, we sold at 300, so it will be around 240 or so, or 230, your PE rate. So what we do, we shift the, if one leg is triggered, then we shift the other leg SL2 cost. So once the stop loss of CE has hit at 400, we will shift the stop loss of PE at 300. It means the PE is trading right now at 240, 230. So our SL will be now 300, not initial stop loss of 400. So we are shifting the stop loss of surviving leg from 400 to 300. So in this case, what will be our maximum loss? Maximum loss is 100 points. One leg loss, that is 2,500 rupees. So this is the maximum loss of one trade in this strategy, okay. Now let us see its backtest. This strategy has been backtested for 1 year from of 2021, basically Jan to December. So this is the outcome of the backtesting. We need around 1.75 lakhs to do one straddle of Bank Nifty. So if you see, the strategy has given 1.92 lakhs in 12 months period with a drawdown of 4%. Drawdown of 4% means roughly you can say 7,000 rupees is the maximum drawdown. Sharp ratio is 5.48, which is pretty good. Anything above 3 sharp ratio is a sustainable strategy. Anything with less than 7% drawdown is also a sustainable strategy. So you can see none of the month has been in negative. Okay, the worst month has been August, where we earn 4,000 rupees, and the number of trades are limited, not much, so there is not much expenses as well. So this strategy has been performing very well. You can see from the paper trade. This strategy also is running on TradeTron with I'll show you. I think from July or August it is running. So this is the equity curve. You can say it's not very smooth, but it is not that bad as well. Okay, the drawdown has been 5%. Okay, it was 4.1% in the back testing, and the Sharpe ratio is 4.83. It was around 5 in back testing, so it is going good, and it has been giving consistently around 6% kind of return since it started on TradeTron. I will put the link of this strategy in the description box of this video. You can use that strategy, and you can basically paper test it, and if you want you can deploy as well, right? So that's it in this particular video of this straddle. If there is anything, you can get in touch with me. We'll be happy to discuss if anything. So we have discussed this entry time, leg-wise SL, shifting of SL, and okay, one more point is left, that is reactivation. Suppose the strategy hits the stop loss of one entry. So what we can do, we should reactivate the strategy in 15 minutes. 15 minutes after exiting, we reactivate it and let it run. So maximum 3 counters we can take in a day. Okay, in the next video we'll be discussing it, though it was to be discussed this weekend, but since I did this strategy this weekend, we will do it in next 1 or 2 days, that hybrid option writing strategy. We will be doing it in next 1 or 2 days, so you can subscribe and you can press the bell icon so that you get notified when the new video comes up. Thank you guys for your time, and all the details are there in the description box. If anything, connect with me. Thanks a lot for your time.